Ladies and gentlemen, good day and welcome to Q1 FY2024 earnings call of Vardhman Special Steels Limited, hosted by Choice Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Sachit Jain, Vice Chairman and Managing Director of Vardhman Special Steels. Thank you, and over to you, sir.
Thank you so much. Ladies and gentlemen, good afternoon, and thank you so much for being with us on this call today. Of course, before I hand over to Mr. Singla to take over some of the company performance, I wanted to share a few important things that have happened with the company. Of course, all of you are aware that we celebrated our golden jubilee of steel business, not as a company but as a business, in April of this year, and we celebrated it by giving a 1:1 bonus. So that might have increased liquidity in our shares. Two, with this 50-year celebration, we have strengthened our relationship with Aichi. Three, we have added to our board. My daughter Soumya has joined the board as an executive director in this board meeting.
Sorry to interrupt you, Mr. Jain. I'm just pulling out your line for a minute. The audio is fluctuating. Ladies and gentlemen, please stay connected. We are trying to reach the management. Request all participants to please be on the line. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. Sir, over to you. You may please go ahead.
My apologies, ladies and gentlemen. There is heavy rain in Ludhiana, so I guess that's why the lines got affected. But anyway, Soumya Jain, my daughter, has joined the company as an ED in this board meeting, and it leads to continuity from the owner family. She's fully involved in the business and involved in all functions, and particularly focusing on HR and strategy and our relationship with IT, which is the most important part of our strategy going ahead. One key thing which is really important for our company that we are seeing in the last few months and becoming a bigger trend is this focus on carbon neutrality, reduction of carbon footprint that we are hearing from global customers as well as increasingly from Indian customers. This is one area where we have an advantage compared to our competitors in India. Carbon footprint for most of our competitors will be between 2.5 to 3 tons of carbon per ton of steel, whereas in our case it is now around 0.8, 0.82, and we have plans to bring it down to 0.5 in the next 2 years and then down to 0.2. But more on that in the Q&A. I'm passing the line to Mr. Singla to take up the opening information about the company performance, and then I'm available for Q&A.
Thank you, sir. During the first quarter of FY24, we have been able to achieve a total volume of 47,400 tons as against 52,000 tons in the corresponding quarter of last year. The decline of 9%, primarily because in the last year, the similar quarter, there was some sales which were on hold in Q4 of FY23. We were able to do more sales in Q1 of FY23. And on revenue side, in terms of total revenue, it is 409 crores as against 469 crores in the corresponding quarter. Then EBITDA is also lower because of the decline in sales prices twice last year, which happened on 1st of July and 1st of October. The total reported EBITDA is 36 crores, including other income, as against 51 crores corresponding quarter of last year. EBITDA per ton in this quarter, we have been able to achieve 7,688 rupees a ton, well within the stated range of 7,000 to 10,000 rupees ton, though we are at the lower end. And PAT, as a result, stands at 18.57 crores as against 30 crores of the corresponding quarter. So that's all on the performance of first quarter. I request now for the question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1 at this time. The first question is from the line of Akshat Mehta from Samiksha Capital. Please go ahead.
Hello?
Yeah, sure, go ahead.
Yes, sir. So, a couple of questions from my side. So first I want to ask about this solar power.
Your voice is cracking, not very clear. Can you use the handset mode if you're on speaker?
Hello? It should be better now.
Yes, go ahead, please.
Yes.
So I was asking about this solar power plant that you guys were talking about. So can you give some color on, by when do you expect this to come around, and, what can be the potential benefits in terms of, power cost?
Yes. So we are targeting the solar plant to come up by end of next financial year. So let's say we'll get the benefit of this in 25-26.
Okay.
No, by 24 end. So My apologies. 24-25. No, 25-26. 25-26. Yes.
Yes. And any number on what can be the potential benefit, rough estimate?
We are calculating, but it will be a reasonable sum. But it will be roughly 50% of our power, which will convert to solar. That is the plan. Most importantly, one is, of course, there's some financial saving, but more importantly, our carbon footprint will drop by 0.3 from 0.8 to 0.5. Okay. We will be roughly 1/5 to 1/6 of all our competitors.
Correct. Second question from my side is, can we share some light on what is our wallet share with some of our larger customers?
Sorry?
Or OEMs. What is the wallet share of the company with some of the larger customers or OEMs? You can share that.
See, customers are very difficult to say because some split is by OEs and then some split is with tier 1 and there is a double counting of that. So we don't look at it that way. But our largest customers together, if I look at just OEs, the 4 largest OEs together will be about 4,000, about 4,500 to 5,000 tons. The 4,000 larger OEs. Similarly, if you look at the 4 or 5 larger tier 1s, which will be again an overlap of the OEs, and this will be 6.5. The top 4 would be 6,500, around 6,000 to 7,000 tons.
This is per month, right?
I'm sorry? No, this is per month. Yes.
Yeah. Right. Okay. So another thing that I wanted to ask you about is that during the year, you've already told that we are going to take some voluntary shutdown since we have to expand our rolling mill capacity. So
we've already taken one shutdown in June. So one shutdown has happened, and then another shutdown is going to happen later in the year in October or November. In November. So one shutdown has already happened, which is why we had this build-up of inventory, which has since quite a lot of depletion has happened. And by the end of this quarter, the inventories will be back to normal.
Okay. So will the shutdown have some effect on, your cost for the year, because there will be shutdown and startup costs, which will be there?
They've already been included in the results. And I think one more thing to mention about the results is that our Q1 price settlement with our OEs is still open. Because of cost of raw material increase, we have been expecting a price increase, and we are demanding a price increase from our customers, which has not yet been finalized. One OE has given the price increase, so that has already happened, and we are demanding a similar increase from other OEs in the same fashion. But that, since the price increases have not been finalized, so that has not been factored into the results of this quarter.
Any sense on what kind of you are asking for?
See, we've been asking what our asks were between, I think we asked about 5,000. The industry was asking between 5,000 and 8,000 rupees a ton increase. Of course, that kind of increase is not happening. But my understanding is at least on hot rolled coils, the increase has been in the range of around 4,000 rupees. So, but the hot rolled coils are the big guys, so they can probably negotiate better. We are smaller companies, and we'll see what we'll get. But we are holding strong as of now.
Okay.
And second quarter, prices are expected to fall after this rise because the raw material prices have fallen. Basically, what's happened in a falling raw material scenario, purchase people find it difficult to give a price increase. That's the problem.
Okay, but
raw material prices have fallen. I'm sorry?
I think we always said in our presentation that the steel prices have already fallen, higher than what our raw material prices have fallen till date.
Yeah, but Q1 we are expecting a price increase, which hasn't yet been finalized. So let's see.
So that will all come in quarter 2, correct? So retrospectively also that will all come in quarter 2.
Now. We have closed Q1, so whatever happens will be finalized. Whatever gets finalized will reflect in Q2. will be accounted for in Q2.
Okay. Okay. Thank you. I'll come back.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. So, wanted to understand that in 1Q, if you see the industry and around 70% of our volumes are coming from two-wheelers and PV. So, PV, we have seen a YOY growth in the quarter, and in two-wheelers also, it has largely been stable. However, in our volumes, we have seen a decline. So, I understand that this is a year of consolidation for us, but still, the volume decline is, not matching with the industry growth. So, what could be the reason for this?
That's an accounting thing which you said. Please do not look at quarter to quarter. It depends on some quarter sales may be higher, the previous quarter is lower, and so spillover effects are always there. So, as Mr. Singla explained, last year Q1 there was a spillover from Q4 into Q1. So Q1 of last year the sales were higher than normal. As you can see in the previous year, every quarter subsequent to Q1 the sales were lower than the 52,000 that we got in Q1. So the other part is in this quarter the sales were lower in this quarter because some sales have been pushed into Q2. So because of normal accounting. So these are all accounting issues which we don't really normally comment on. We have to see full year basis what the sales are likely to be. On full year basis, our sales are likely to be similar to last year. It was a little bit up, little bit down, but around the same level. Now, rightly mentioned by you, TVs are doing well, but there are certain other segments which are not doing as well. So motorcycles has not been doing as well, now picking up. So we should see some impact on motorcycle sales. And third, we also have a component of export of components to which our steel goes. So because of global economy suffering, there has been a drop in some of our customers' usage who are exporting components. So the sales that we report is a combination of all these factors.
Oh, okay, sir. And so secondly, we have seen a cost increase because of change in fuel mix. So what was the exact quantum of the cost increase because of the fuel mix, and can we have multiple...
So main reason for cost increase in fuel, in power. So power tariff went up, and fuel we have shifted to GAIL, the gas pipeline, which means the cost will now come down from July onwards. So second quarter onwards, our fuel cost will be significantly lower.
So when we speak about price increases with customers, and given that you indicated that we are asking for a lower price increase vis-a-vis industry, so could you give us some light?
We asked for 5,000 rupees, and some other companies have asked for 8,000. So I don't know what is their calculation. We asked for 5,000 rupees price increase.
Yeah. Yes, sir. So.
Go ahead.
Yes, sir. So just wanted to understand with respect to that when it comes to our final product, what is the difference in pricing that we offer to customers versus what other peers are offering to us?
It depends on customer to customer and supplier to supplier. So at the same customer level, for example, a Maruti for the same product will give a similar pricing, same price to all their vendors. Similarly with Bajaj. But if you look at in the market, pricing by some of our competitors will be significantly lower than our prices.
Sir, previously we have given a guidance of 2.05 lakh tons for FY24. So
we will be around that. We will be around 2.05, around that figure only. We stand by that number.
And how much would be the mix from IG?
We don't share those numbers. But eventually it will be 25,000 tons by 25-26. But it will be about 8 to 10,000 tons.
Okay, so when we talk of taking price increases with customers, so I understand that we factor in the raw material volatility, but do we also factor in the higher, power and fuel costs and other costs in those in that contract?
We try, depends on what the OEs give. So OEs are larger companies, much larger than us. They're making very good profits. And let them see what they pass on to us. It's not in our hands. They are much bigger than us.
Yes, sir. And so lastly, by when do we expect the, so you had mentioned that 7 to 10K per ton would be our guidance on EBITDA per ton. So by when do we see it go to on the higher range, or at least till above 8 or 9?
Very difficult to predict that. If we get the price increase of 2 to 3,000 or 2 to 3,000 or 4,000 that we want, then this quarter itself will reach 10,000 or 9,000. So it all depends on the price increase once it gets settled. If they don't give any price increase, then it'll remain at this level. So it's very difficult to predict what will happen. And we don't give any significant predictions of where it'll be in this range. There are so many factors which affect the PBDIT. So we would not like to comment within this range, when it will be higher, when it will be lower.
Okay, sir. And so lastly, given the current cost structure, is there a more headroom or plans to reduce the fixed costs?
As volumes increase, fixed cost per ton will definitely either will come down a bit or remain stable despite inflation.
Okay, sir. Thank you, and all the best.
Thank you.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Ritvik Sheth from One Up Financial. Please go ahead.
Yeah. Hi. Good afternoon, sir. Sir, a couple of questions. Firstly, on the IT material that we are exporting, sir, how has been the rejection rate trending in the last 3 to 6 months? Has it improved versus?
Yes, it has improved. Rejection levels are gradually trending downwards.
Okay.
But still there, but trending downwards.
Okay. And it's as per as our expectation and our plan, what we have built in, and we are expecting to smoothen the process over FY24. Would that be a fair understanding?
Yes, by 24 we should be having a far smoother process. Yes.
Okay. And
so some equipment that we've ordered, if you'll see our intimation to the stock exchange, some equipment is coming in December. So 160 crores is the equipment we have finalized over the last few months, which has been approved by the board. So that equipment will lead to some of the quality improvements. But that will happen by, unfortunately, those equipments have got delayed because of supply chain issues and so on. So that will all be done only by December 24 to March 25. So the full impact of that we'll see in 25-26.
Okay. And so, and you mentioned around 8 to 10,000 tons of exports to IG in current year.
Correct.
Okay, great.
In our books they come as domestic sales because we deal with Toyota Tsusho, the Toyota Group's trading arm.
Yeah. Okay.
So in our books they come as domestic sales.
Sure, got it. But it's like deemed exports.
Correct.
Right. Okay. And sir, on the pricing, you mentioned that Q1 we are expecting a price increase and then again decline because of raw material prices easing out. So would that be a fair assessment that if the OEMs don't give us an increase, they won't ask for a decrease as well? And then
the OEMs will always ask. It's up to us to agree to give or not to give.
Okay.
OEMs want more money and more profits. They're already doubling their profits and they want to earn even more money and they squeeze smaller suppliers. That's fine. That's part of the game.
Okay. But it will continue to be a quarter to quarter pricing negotiation still.
Yes. that happens. And we factored all these when we say that we will get for the full year 7,000 to 10,000 rupees EBITDA per ton.
Right.
And every quarter it is very difficult to comment and why is this quarter lower than that quarter. I can understand stock market works on quarters. Businesses do not work on quarter to quarter.
Yeah. No, I agree because if we see, despite not getting a price increase, we are at about 7,500 per ton if you adjust for the electricity incentive, and if we get, then we are closer towards our upper end of the price band. That is what I was trying to comment.
Yeah.
Okay.
You're right.
And, sir, what is the capex for FY24?
Most of this capex will still be rear-ended because orders have been placed, and by the time they come in, so this year about 40 crores, except for if we get finalized those land parcels we're looking at, then it will be higher.
Okay.
Then it will be close to about 90 to 100 crores.
Okay. Okay, sir. Thank you, sir, and all the best for the rest.
Around 90 crores, roughly 90 crores.
90 crores, okay. And without the land, 40 crores. Okay.
Yeah, without the land, 40 crores. Yeah.
Sure. Okay. Thank you.
Thank you. The next question is from the line of Deep Mehta from Bank of India Mutual Fund. Please go ahead.
Hi, sir. Thank you for the opportunity. Just one clarification. Yesterday, we have announced our one capex plan of increasing our capacity by 50,000 tons. Just want to confirm that is this over and above the 30?
No. This is part of the original plan. It is just orders have been placed. So,
okay.
Orders have been finalized. I mean, approved by the board. One order placed, one order about to be placed, but clearance given by the board.
Okay, so by
So it is part of the originally announced plan. Is nothing new happening. Our capacity is not going beyond the current level in the existing plant.
Understood, sir. And second question, aspirationally, we have target to have our exports to 25%, which is around 60,000 tons. So just want to understand what part of this incremental volume will come from Aichi or Japanese OEMs and what will be over and above that.
We don't share those numbers. Apart from Aichi business, we have said will be about 25,000 tons. But there are other OEs through whom also we don't separate all those, how much business has come through them and so on. So they are helping us in the entire business. So very difficult to say they are helping us here and not helping us there.
Fair enough, sir. That's all from me. Thank you very much.
Thank you. The next question is from the line of Anil Kumar as an investor. Please go ahead.
Good afternoon, sir. Sir, my question is, how much part of our raw material cost is electrons? Their prices have increased, and how much the cost of raw material is part of that? And number two, how much of 160 crore we will go through debt, and how much from internal accrual?
I'm sorry? The debt.
Sir, how?
So our debt equity will remain below 0.5 in all stages. So we don't share out each number, how much is from internal accruals, how much is from debt. So debt equity currently is around 0.2 and it will not cross 0.3 in the near future.
And sir, how much of the percentage of raw material is from electrodes?
Electrodes won't come in raw materials. So electrodes is a separate item. It comes in consumables.
Consumables. Yes. So how much is the percentage?
We don't share all those items. What prices we purchase a particular item are confidential between us and our suppliers. But roughly, prices of electrodes have gone up significantly and then have started falling. So second quarter electrode consumption, though it's falling. So second quarter, our prices of electrode consumption costs would be lower.
Okay.
As you said, all costs are trending down in Q2, which is why there's a whole trend of lowering price costs, and therefore the OEs are having difficulty in giving a price increase in Q1. But we are still holding strong, and we are hopeful that we would get some resolution in the next few weeks.
All right, sir.
So we have a genuine case.
Okay. Best wishes, sir. And as always, you are doing your hard work. Thanks for that. Thank you.
Thank you so much.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Mohammed Hassan from Fairdeal. Please go ahead.
Thank you for the opportunity. Sir, I actually wanted to know what is so special about our company that while the other players in the same segment are asking for 8,000 rupees price increase, we are capable, we will be sufficient in even 5,000 rupees with price increase. So what is so special about our company? Just want to know that.
So first of all, Mohammed Hassan Saab, thank you for thinking there's something special about our company. There's nothing special in our company except for the name special. So we are a normal manufacturing company, manufacturing steel for automotive sector. So why we are asking for a lower increase than some of our other competitors? Because we actually face the OEs, and our OEs respect Vardhman as a company which is transparent, which has to be able to justify the cost increases. OEs are very smart purchasers. They don't give a price increase just because you're asking for it. So you have to justify cost item by item, line by line, why you're asking for a particular increase. If you recall last year's first quarter, there was talk of 25,000 rupees price increase by some of the steel companies. Eventually, they settled for 9,000 rupees. So you can ask anything, you will see what price you settle. And Vardhman did not put a number out. We were the only company that did not put a number out because we felt these were outrageous demands. But if they're asking 25 and they get 15 or 18, they'll happily take it. But in our view, those expectations, those demands are outrageous. So if somebody is asking for a higher increase, they're fully free to get. And if they get a higher increase than we, because the OEs give the same price to everybody, so we'll also be the beneficiaries of that price increase. But we have to justify to the OEs, and I personally meet the OEs. And one huge advantage that we have gained over the last few years, the OEs all trust us for our transparency and sharing our data, which has built a far better brand equity with our OEs. And we are very clear as a company, we want to make a good profit, we don't want to profiteer.
Got it, sir. Thank you so much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar, Jan Saab. Namaskar, Singla ji. Sir, just if you take the breakup of your cost of material consumed, if you could provide in percentage terms what are the key components and how have the trends have been over the last 2 quarters?
Okay, I'll just pass on to Mr. Singla, our CFO. Cost of materials, what are the trends in various components of cost?
In the last 6 to 9 months, if you will see the trend of all components of raw material, it's on declining side. Earlier, from October 22 onwards, the prices started increasing like various ferroalloys, nickel, moly, vanadium, but later part of the second half, the prices, I will say rather all commodity prices have started declining. And accordingly, some of the inventories which were booked in the later part of the last financial year have been consumed in the current quarter. But accordingly, the full impact of declining prices will start coming from quarter 2.
So sir, when we book the deliverables for the OEs, how do we negotiate the prices when if the trend was declining? What could be? How could we explain this increase in the price which we have asked for?
So we are able to explain the increase with data. So typically for the quarter increase, they look at the previous quarter's cost.
Correct.
And indices. So which is why we are very confident that we are due for this price increase. And Q2, we are agreeing that there's a price reduction because costs have come down. But the purchase people, when they see the costs coming down, then they want to not give that increase which is due to us. However, 2 OEs, one I forgot to say, 2 OEs have already given us a price increase, which has not been factored in because letters have not yet come in. So, but one OE is factored in, which is a small OE. But two OEs have given a price increase. So very clearly the trend is they have to give a price increase in Q1 and then a reduction in Q2. But they may say that, okay, because there's a reduction in Q2, maybe they are trying to no change in Q1. And maybe then Q2, there'll be no change. So we don't know how they are thinking. That is perhaps what they are thinking. But we are very clear we need an increase in Q1. But anyway, those are negotiations going on. So it's not in my hands.
But what are the key, in percentage terms, if you could give, what are the key components from out of this line item of 272 crores, the key percentage of raw material constitute?
We don't share our raw material mix because raw material mix keeps changing depending on the relative prices. So, for example, sponge iron, one of the elements out there which can be replaced by gas-based DRI. That figure can change from 5% to 15%. Shredded scrap can change from 5% to about 15 to 20%. And therefore, other components will come down or increase. So the factors keep changing, and we don't share our mix because it changes depending on market price.
Sir, when you in your management commentary, you mentioned about this will be an year of consolidation for the company. Yes. So, could you please explain what are you trying to explain to us in terms of consolidation? That means utilization levels, profitability. What are we indicating, sir?
Consolidation means that we say we would like to not increase production, focus on systems to make sure quality is absolutely okay. Any areas of improvement required, improve them, improve our internal audit system. So we have last year hired E&Y for our internal audit also. So, strengthening all those systems because as the organization has grown a lot over the last 5-7 years, we intend to see that if there are any lapses, lacunas anywhere, get them sorted. With the GAIL pipeline which came in, there's a lot of effort to get it back. And then SAP implementation will begin later part of this year. So all these are part of stabilizing the organization, consolidating the organization, building the culture as per Aichi framework. Some of our members have already been to Aichi earlier this year. Soumya and Mr. Rewari, our other ED, CEO, they visited Aichi. So we are having the new president from Aichi has come in and incoming president has come and visited us. Then METEC, the steel machinery fair was there. So there are so many things which are happening. So we have to all understand and organizations have to pause and consolidate and strengthen themselves before you're ready for the next phase of growth.
So we can also assume that this is the groundwork for the IT to be on board and for the further investment for them going ahead, as has been mentioned in the...
Absolutely, because a lot of action is to happen over the next 5 to 7 years. And then taking Soumya on the board also is part of that consolidation. That even the succession plan will gradually become clearer. We are also working on a plan for our capacity. Then 25, 26, when we fall short of capacity, how do we make sure that capacity comes on board? So there are several things that the management is working on. And that is the time to pause and not push your accelerator on everything and then start delaying the organization.
And sir, secondly, you did spoke about replacing this higher fuel cost. You spoke about fuel cost component will be falling. They will
we have got the pipeline from GAIL has started, which was supposed to have started on January, which got delayed. So we were buying much more expensive gas from Think Gas, one of our suppliers, who, because we were dependent on them, overcharged us. And so we had to pay. We had no option. Now we have shifted to GAIL. We will be saving significantly on our gas consumption.
What is our quarterly requirement in value terms?
We will be roughly on current cost. We'll be saving over 3 crores per quarter starting second quarter.
Okay, 3 crore savings. So 12 crore on an annual
basis. Over 3 crores, yeah. We will be saving over 3 crores.
And how much
second quarter we'll have another issue that because of falling costs all around, there'll also be some inventory losses. Last 2 years we've had some inventory gains as we went along, which added to our EBITDA per ton and took it beyond 10,000 also in some cases because of inventory gains. in a falling raw material scenario for at least one quarter, if prices stabilize no further. But Q2, clearly, there will be inventory losses.
Okay. So this will get our fuel and cost savings will get negated by the inventory losses. It will be higher.
Yes.
Inventory.
Yes, to some extent, yes. And Q3 onward, we would be at normal levels.
Okay. So we can see the trend below 7,000 also, which is our benchmark.
Again, I said we don't predict on every quarterly numbers.
No issue, sir. I got your point. But
for the full year, we expect to be between the 7,000 to 10,000 range. And as of now, we expect to be at the lower end of the range of 7 to 10. As of now. If things change, we will give an update in the next quarterly results Concall.
Sir, for the pipeline, how much have been our investment?
I'm sorry?
The gas pipeline from GAIL, how much have we invested?
There is no investment from us. GAIL has made all the investment.
Oh, okay. And how are the pricing done here? It is an annual contract, a quarterly contract?
No, it's a formula-based contract which prices change every 15 days. Every month the prices change. So we are in market price.
Okay. And
this Henry Hub, which is the gas index.
Okay. So the prices for August have been trend lower than what July was?
See, the prices have been the same, but we were earlier, as I said, from think gas.
Yeah.
They were overcharging us.
Correct. But now, as you told us,
market prices. So July, sometime in July is when the line started, early part of July. So second quarter, 12th July, sorry, the line started. So after 12th July, our costs have come down.
Okay. And for the consumable also, I think so in the notes it was mentioned that for this quarter.
Consumables also, our prices are falling. So the costs will come down as we move ahead. Raw material also prices are falling. So all around on commodities with falling prices, costs are coming down, and there will be advantage because of that and some disadvantage because of inventory loss.
Sir, consumable, can you give an understanding, sir, what was the adverse impact quarterly?
So, for example, graphite electrodes prices are around 350 per kg. Right. And they have come down to about 260 to 270.
Okay.
So that's the level of reduction which has happened.
Right.
Scrap prices, HMS, local scrap, has come down by 4,000 to 5,000 rupees a ton.
Okay. So if this trend continues, then for Q3 onward, we will be in the normalized margin post this adjustment for inventory.
Again, I'm saying we do not predict every quarter's numbers.
No, I'm just only looking for the trend, sir. If these
trend will be within 7,000 to 10,000 rupees for the year. Quarter to quarter, very difficult to say. But in all probabilities, you're right. Q2 should be a lower PBDIT. Q1 should be higher than this number, and Q3 should be higher than Q2. In all probabilities, that is the way it should be. But all depends on how price negotiations happen. But you are right. Q1 will be higher than this, Q2 will be depressed than this, and Q3 should be reasonably better.
Sir, if you look at the PLI scheme, especially for this value-added steel segment, what is your understanding? How can a company like us going to benefit, or what are the key contours in the PLI scheme, if any?
So there are two main areas. You have to make a particular series of investments, which we are going ahead and making those investments. And the second item is you have to increase the quantity of specified grades of steel, which is for powertrain. And we have full plans to increase the production of those. So both things have to happen. If both things happen in a predicted annual rate, we should get a figure of between 25 to 30 crores.
Sir, can you repeat the first point, sir? Investment point I missed because of some
investment has to be over 100 crores.
Okay.
And we have specified, they have asked us to specify what all investments you are making. We have specified those investments. And second, you have to show an increase in production of specified grades of steel. So we have already put that in our plan. if we meet those increases in an annual basis, as you predicted, and if the investment is made, if both these conditions fall true, then we should get about 25 to 30 crores in 4 to 5 years.
In 4 to every year will be reimbursing?
No, total. It's a significant amount.
Okay. And our capex of this 160 crore is aligned to the PLI part also?
Yes, it is aligned.
It is aligned to the PLI part. So, sir, if we look at a holistic picture, as you have already given for 26, 27, 30, in the realm of space, sir, we would be already classified as a special steel by name, as you mentioned. But we will be a key differentiator, sir. What should be the various key differentiator of our company as a supplier to OEM, then comparison to your nearest competitor?
I would say there are two main differentiators. One is our carbon footprint is way lower than all our competitors.
Right, sir. Next.
And this is becoming of value more and more to OEs. In fact, yesterday I was talking to a large Japanese trading firm. They are saying within 2 to 3 years you should start expecting premiums coming in Europe. In India, I asked their view. They said in India you may not get premium, but clearly you become more attractive to OEs. So a share of business for lucrative OEs, which you want to increase your share, you will get a chance. But this is the view of an external but global trading company.
Right. And the ESG ratings will also be...
This is one big advantage. Yes. The second big differentiating factor, which has already been discussed in the last 3 years we are discussing, with Aichi, our partner, and with Toyota global approval, more and more Japanese companies who want to look at sources of steel other than Japan are coming to knock at our doors. So when that happens, we should be able to attract a better set of businesses than what we are having today. But very difficult to predict all those numbers, what will have an impact. But directionally, we have said that by 25, 26 or around that time, I would like to target an EBITDA per ton figure of 10 to 12,000 rupees. But we are not ready to say that we have reached that level, that we'll get that. But that is what we like to target.
Right. And here, sir, our ESG rating will also significantly improve and as and when that...
It will improve. So I don't know how the ESG ratings are done. Right. We haven't studied that. But we've looked at our carbon footprint, and we are telling that to all our customers, and everywhere we go, our customers are very happy that you are proactively doing this. And to the best of my knowledge, I haven't come across any of our competitors doing this. But they can't, because they're all way behind us.
And who are the like-to-like comparisons, sir, if we take...
So our competitors would be Sunflag, Mukand, Kalyani Steel, in some parts JSW, in some parts Tata Long, in some parts Jaiswal Nico, but in some parts Arjus. But our direct competitors would be Mukand and Sunflag.
Correct. And then lastly, in the budget also there was some provision for building up of facility, which I think the Tata Steel is coming up with scrap-based, especially in the state of Punjab only. So
yes, they are putting up a steel plant, but this is not in our line. They are putting up for construction steel.
Mr. Kapoor, may I request you to join the queue for any follow-up, as your participants waiting for their turn. Thank you. The next question is from the line of Lalit Kumar from LKR Advisor. Please go ahead.
Thank you, sir. Just to reiterate on the previous speaker who had asked for, right? 2 years back, we were roughly in 2021 at an operating margin of 15-16%. This quarter and the last 2 quarters, we have been doing it 6-7%. So with all the savings which is coming via the solar plant, the RM price, you have said that are heading down and will consolidate, and the GAIL plant savings, by when do we see OPM coming back in the range of 12-13%, please?
We don't look at operating profit margin. As I said before also, these percentages don't have value. It is the absolute number which we look at. So yes, when raw material prices increase sharply, and prices of steel go up, then operating margin percentages will fall. And when the prices come down, then the margin percentages would rise. Of course, adjusting for inventory gains and losses, so on a normalized basis. So we are never guiding on what will be our EBITDA percentage. We are guiding on EBITDA absolute numbers, which will be 7,000 to 10,000 rupees.
Perfect. Thank you.
Thank you. The next question is from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
Sir, just wanted to know that after this capex of through which we'll get the PLI benefits also, say in FY26, what will be our peak capacity? And at that time, what is the kind of per ton margin we would be targeting? What are the steel prices at that time?
Our peak capacity will be around 230 to 240,000 tons sellable quantity. Of course, melting would be higher. The melting would be around 250 to 260,000 tons. And as of now, we have not changed our guidance. So we will be 7,000 to 10,000 rupees EBITDA per ton. However, to get satisfaction, I've always said that is my target, that I will feel satisfied that I've done a good job if we're able to reach 10,000 to 12,000. So that remains an aspirational target. We have not got enough confidence just now to state very clearly that we'll reach those levels.
And sir, would our
for all practical purposes, for calculation purposes, etc., please look at 7 to 10.
Okay. And sir, are we almost every time working at 100% capacity utilization, or at sometimes we are not able to do it at?
No, so there's always when the capacity increases in a spurt, then of course it takes some time for capacity to build up.
Correct.
As happened 3 years ago, it took us time to build up to our capacity levels. But then something else becomes a bottleneck. So for example, today rolling mill is a bottleneck. And with rolling mill capacity gradually going up in the next year and a half, then the capacity will go up, and then immediately it will take maybe 6 months, 1 year for the capacity to get utilized.
And sir, are we the only ones, or are we one of the forerunners in getting Japanese business, because that is always a difficult business to get, and once you are into their ecosystem,
Japanese special steel companies have been present in India for quite some time. Daido has been present with Sunflag, I think, for the last 10 years or so. Sanyo Steel is present in India. They had a JV with Musco, then they have taken it over. So Sanyo Steel has also been present in India for at least 7-8 years or 10 years, I think. I don't know how long, but at least 8 to 10 years. So Sanyo has also been present. JFE is present in JSW. So all the major Japanese OEs are present, steel companies are present. The difference that we have is that our JV with Aichi is a strong participative JV where our Aichi people are placed here, and together we are selling directly, and we have got approved by Toyota. So to the best of my knowledge, none of the other companies has got a major approval by a Japanese OE for overseas business. Again, this is the best of my knowledge. I could be wrong, but to my knowledge, none of our competitors have got approval for overseas business by a Japanese OE, by a major Japanese OE. We have got from Toyota, and we should be getting from another OE in the next 6 to 8 months a global approval.
But that would be as big a company as Toyota, or it is much smaller?
How can you get a company as big as, how many companies will be as big as Toyota? So obviously it will be a smaller company.
Okay. Thank you so much, sir.
But those smaller companies are also big enough for us. We are a small steel company, please remember.
Okay, sir. Thank you so much, sir.
Thank you. The next question is a follow-up question from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
No, my questions are answered, sir, but only one thing is about the, are we entertaining also, sir, that plant visit or the facility to understand the process of investing community?
Oh, absolutely. So, Sadli, who's our investor relationships boss, she dictates when visits are allowed and so on. So she tells me to be available, and I'll be available, and our team is anyway available. So, so you can decide when you all want to come. Please contact Sadli, and the visit can be arranged. Not a problem at all. It's only if I have to be there, then she has to seek from my time. Otherwise, not a problem. As long as there's no customer visit on that particular day, we will be open to visitations. And not only open, we'll welcome.
Right. Sir, on the other income...
Yes, our chance for you to get to know our company better.
Thank you, sir. Sir, for the other income, I think so, there are some decision pending from the state government. So,
yes.
If you could give us some more understanding and the quantum
there are two
also.
Parts in other income. One is electricity duty refund, which comes in the monthly bills and therefore gets adjusted automatically. The second component of other income is GST refund, which we have to pay and apply. So that part is pending, and government will eventually pay. So, those government has to look at their own finances. They are busy giving subsidies on other parts. So, they will soon have to allocate budgetary resources for this and then pay us all. So entire industry is waiting for these refunds. So it will come. It may take a little bit time.
So we are booking the income and it is lying in the
because the income has already come. No? When the government has given a scheme,